Joining us, everybody. This is CLE presentation on blockchain innovation in the law and corporate governance. Today, before I introduce our speakers, I just wanted to mention a couple of things about our section, the Corporate Counsel section for the Hennepin County Bar Association. Whether you're a member of our section or not, if you're a member of the Hennepin County Bar Association, this is a free CLE. We host several of these over the course of the bar year. And I also wanted to mention that we've got an upcoming CLE that's not free, but I think will be worth your time and money as well to register for it. Coming up on May 17th, it'll be at the Campus Club at the University of Minnesota. We actually have a great program lined up. The first hour, we are partnering with the civil litigation section to give you a panel presentation, which will be on working with outside counsel. We've got two in-house attorneys who are going to be on that panel, including the general counsel from Graco, as well as a partner at Green Espel, who will be talking about how in-house counsel can work with outside counsel. And that'll be from 2 to 3 o'clock. And then from 3 to 5 o'clock, we have our 2-hour CLE on elimination of bias, which will be presented by Ellie Krug on gray area thinking. It's going to be a really great program. And after that wraps up, we have our end of the year social networking happy hour. So I hope that you'll be able to join us. It'll be a fun time. Today for our presentation, I'm happy to introduce our speakers, Professors Craig Calcaterra and Professor Wulf Kaal. Professor Calcaterra is a professor at Metropolitan State University. He has his Ph.D. in mathematics from the University of Hawaii at Manoa and was also a Fulbright scholar in Italy. Professor Kaal is a professor and director of the Private Investment Fund Institute at the University of St. Thomas School of Law. He has his JD from the University of Illinois College of Law, as well as his PhD in Law and Economics from Humboldt University of Berlin. And together, Professors Calcaterra and Kaal also developed a platform called Repute, which is used for verified reputation in the crypto economy. Today, they're here to present on blockchain innovation in the law and corporate governance. Please join me in welcoming them.
Can everybody hear me? Is this on? It seems to be on. Good. Thanks for being here. Thanks for your interest. See some of my students here. Thank you for coming. I see some people who were here last session. Thank you for coming again. So what we want to do today is obviously talk about blockchain and the role of blockchain in the law. Let me tell you up front, I just finished teaching coding for lawyers. I still cannot wrap my head around what my students accomplished. We're talking about students providing actual legal solutions for things we cannot handle right now in the law, problems that we have in the law. And many of you will say, well, there are not that many problems. It actually works pretty well. And I agree with that. But there's huge optimization potential. So if you're interested, I have over 100 plus 120 or so PowerPoint slides with coded legal solutions that I can make available right now. My assistant is compiling it right now. So this is Solidity code for legal implementation through code that I just taught. So after 4 months, and I just scratched the surface with my students in teaching them basic Solidity structure. And they have, let me use the phrase, they've blown my mind away. I couldn't believe it. And you set them up, they start digging in, and this is how coding works. Yeah, you need to sort of dig in and I said mess with it. And they came up with things, and the code compiles. It's not just, hey, here's annotated code. The code compiles on Ethereum in the testnet. Yeah. So this is real. This is not some academic thing that, yeah. So this is not ivory tower. This is real. You can do this now. My students have done it this semester. Yeah. So I'm extremely proud of these students. So, and I really don't feel like I can take credit for it because they did all the work themselves. I just set them up. Yeah. So here's what I want to do today. So this is sort of more basic perspectives on the issue. So let's talk a little bit about what blockchain technology is. How many of you know what it is? If you're confident with it? My students have to sort of, Ms. Uko, you have to, yeah, okay. Okay, so we'll do a little bit of that. And then we'll talk about what are smart contracts and how are smart contracts adding a layer that is legally relevant for the lawyers in the room. And then next question that I'm hoping to address is the existing legal infrastructure sufficient to address legal challenges presented by smart contracting? So my friend, co-founder, and co-author Craig Calcaterra will take over later. I'll keep it to 19 slides, and then you can jump in. So we started with Repute. We had to rename it Samada for legal reasons. Oracle has a Repute division, and we really don't want to get into mess with them. Yeah, so we moved away from that. But what I want to do is today we will talk a little bit about an article we co-authored in the Business Lawyer, ABA Business Lawyer. And that was sort of the intellectual framework for what we are working on right now, which is leads us to optimizing corporate governance perspectives with coded solutions in blockchain technology. Yeah, so Craig will talk a little bit more about the basic infrastructure for that. I'm just sort of the warm-up session for what's smart contracting in blockchain. Yeah. So who owns Bitcoin? Hands, please. What? Nobody. Nobody owns Bitcoin. Okay, what is Bitcoin? Ms. Uko.
It's a cryptocurrency.
It's a cryptocurrency. Okay. Any more qualifiers?
I mean, I would say it's a digital currency that you're able to use and trade on the pretty much the ledger that is set up, whichever you're doing. So if you want to be able to pay money, you're able to take that digital currency and pay for an asset, whether it be that you're exchanging in a contract, and then you use that digital currency, pay for the asset, and you're able to get it in return.
Okay.
Can you repeat that?
Okay, so it's a digital asset. It's a value exchange function. Yeah. What's the underlying value of Bitcoin? Oh, people are freaking out now. Oh, there's nothing. It's just the assumption of people that it may be valuable. Tulips, okay. We also have crypto kitties already on Ethereum, but that's a different story. Okay, so does Bitcoin have smart contracting built into it? So Bitcoin is first generation. Yeah. Mining it still takes takes a lot of time, a lot of energy. Yeah, so there are all kinds of critiques that come with that. But Bitcoin was the first, so Satoshi Nakamoto, white paper, 08, 09, as a reaction to Lehman Brothers, is giving the world this new technology. And of course, many of you still influenced largely by the mainstream media, which is very hostile in this country. Let me tell you, in other countries, you have billboards advertising to grannies to buy Bitcoins. In London, you can walk on the streets and there's a sign that says, go buy Bitcoins here. Yeah. So in this country, things are still a little bit behind in comparison to Europe, especially Slovenia, Switzerland.
Or ahead. That's a speculative.
Let me qualify this. Thank you very much.
Most people who own Bitcoin don't use it to pay for things. It's speculative investment. That's the other definition.
Okay. Over 43% of all crypto startups are based where? In this country. So it's interesting. We don't get full support from the regulators. At the same time, we have, because of our tax expertise, sorry, not tax, tech expertise, we have a lot of substance in this space. Yeah? So it's mostly Silicon Valley. Okay. But so Bitcoin is the first generation. Yeah. What's the second generation? Ethereum. What is Ethereum? Ralph knows all this. Okay. What is Ethereum? So Vitalik Buterin, the founder of Ethereum, in 2015 decides that the protocol that's the consensus algorithm on which Bitcoin is based can also be used for smart contracting. So it's not just an exchange of value that may or may not have underlying value, right? You can actually build constructs on this in code. Yeah. So the idea here, let me go back. The idea here is Bitcoin is the tip of the iceberg. Everything else, second generation, is below the waterline, That's Ethereum smart contracting. So what can we do with the technology in smart contracting for society and law? Yeah? It's all currently based on Ethereum concepts, smart contracting in Ethereum. So 80%, over 80% of all developers, crypto developers, are developing on Ethereum. That's where the power is right now in this world. Yeah? They're developing solutions that's below the waterline in this comparison. Yeah. So what is that? Governance solutions, smart property, voting solutions, smart contracting, name registration. I'm just putting a few on. What is smart property? What is it?
Real estate title system, or the ownership chain, or maybe not. I don't know. That's just a guess.
Coded solutions that provide access to and replace existing real estate legal solutions. Yeah, and my students just coded. I had 4 or 5 students that coded this already. Yeah. Okay, so this is Vitalik Buterin, second generation Ethereum. He defines it as a blockchain is a magical computer that anyone can upload programs to and leave the programs to self-executed, where the current and all previous states of every program are always publicly visible, and which carries a very strong crypto-economically secured guarantee that programs running on the chain will continue to execute in exactly the way the blockchain protocol specifies. What does that mean?
Sounds like satire.
What does it mean? What are the core elements here? Well, we have self-execution, full transparency, immutability, crypto-economically secured guarantees. Guarantees through technology. Let me translate this. Trust through technology. What do lawyers do? Some people will take issue with this, but we create trust as intermediaries with our reputation, enhanced value at the core, right? We're intermediaries. That's what we do. So this is a block. Sorry, it's scrambled up there. So think of the block creation as, and we're just doing basics now. Think of it as a global Google spreadsheet or Google document, or think of it simply as a book, where every content on a page is fingerprinted on that page and transferred to the next page, and then added additional content on that page. Then this entirety, this hash plus all the content on this block is then fingerprinted again, hashed into fingerprint on the next one, and so forth. Yeah, so it's a basic idea. Craig just taught the mathematics of this in my coding for lawyers class. So if you have questions mathematically, yeah. So here's when I do this, I just try to get people to the point where they realize that they should actually be here somewhere. Meaning they should start appreciating and wanting to learn more about it. So many of you are here. The fact that you're here alone tells me that you may agree with some of this. Yeah, that there may be something that is worth finding out. Yeah, so and I'm learning every day. Just to be clear, this is so intellectually rich. It's sometimes mind-numbing. So really overwhelming, the amount of information that comes out, because so many really, really great people are working on all these new solutions. So quick summary, blockchain is a shared ledger. We use cryptography. We have a consensus protocol and shared contracting. Yeah. Okay, if we can go back if you want, but I want to keep moving here. So what have people said about this technology? Now, some of you may say, well, this is completely too broad, hyperbole, and so forth. Yeah? But people literally compare it to harnessing fire, steam engine, first light bulb, first flight, atomic energy, first personal computer, internet, and so forth. I like to compare it to the internet age. So 1994, The internet is born. Most people are very hostile. So what is this? Why would I ever be using this? This is ridiculous. Yeah, I think about all the things that people said in those days, yeah, about the internet. So what has the internet given us? 94 forward. Personal communication, self-publishing, e-commerce, of course, huge, right? It's unthinkable right now. Our economy really would be crippled without it. Any economy. Social interactions. Now, a lot of people, of course, take real issue with that, and things are changing, of course, if you have technology. So let me ask you this: what do you think? Where is the investment in the new technology, blockchain technology, compared with 1994 levels? Global investment in blockchain technology compared with global investment, inflation adjusted, 1994 into the internet technology. Where is it? What do you think? What do people think?
I would guess it's less.
Less.
Yeah.
Other opinions?
Well, the internet was created without much investment at all, except by the government.
I'm talking .com.
Okay.
Beginning of .com, basing all these new technologies that came out of it. Okay, let me back off. What did we get out of the internet bubble? Okay, there's so many lawyers in this room. Okay. Okay. What companies that revolutionized the way we do things today came out of the internet bubble?
Like Microsoft.
Microsoft, Google, Twitter, Amazon. We can't live without them. We can't. We can debate that, but I don't think we can. So, so let me go back to my point. Inflation-adjusted investment, global investment in the technology, blockchain technology, is right now, according to most estimates, 10 times what it was in 1994 in what we invested globally into the internet technology. That's, I would argue, that's significant. Yeah. So if you think what's coming, so what does this mean for the blockchain promise and what is coming out of this technology? What we may achieve as a society with this technology. Yeah. So one item that is this whole idea of a decentralized society. What does that mean? What does a decentralized society mean? Why are we?
No government is in control of it. In whole order.
That's for most of us, especially if we're lawyers, extremely hard to stomach, right? Because we thrive on centralized thinking. We've created our society in centralized structures. The best thing we had. We couldn't do it in any other way. Yeah. This technology allows us to go above and beyond that. I believe really understanding what that means, what decentralization means, requires I should actually be teaching a separate course on what that means and how it's different from centralized thinking that we've been trained in all our lives. All of our lives, every one of us. Yeah, centralized thinking means hierarchies and using intermediaries with reputation enhancement to get things done. I'm oversimplifying this a little bit. Yeah? Okay, so the idea of this technology is decentralization and disintermediation. Lawyers are intermediaries. That doesn't mean lawyers are irrelevant, but the role of the lawyer is changing through this technology. And my students are proving it, coding for lawyers. They're proving it every day. They're creating new coded solutions that this is coming. Yeah? Okay, so just some ideas in terms of perspectives on this technology. I would argue that the technology encapsulates everything we've been seeing in terms of disruptive technologies. The real surge that comes with this technology is AI and big data in combination with this technology, in my estimation. So here's just some data on the investments into this technology. As I said, it's around 10 times by now, inflation adjusted in comparison with the internet investments. And let's be clear, this includes top dogs on Wall Street. My old employer, Goldman Sachs, just bought Poloniex. They have, I don't want to quantify it, but they have a very significant investment in this market. Not just by buying Poloniex, which is one of the crypto exchanges, one of the most successful crypto exchanges in America. There's a reason why they bought that. So Goldman Sachs doesn't make investments unless they satisfy their investors and their partners and so forth. Yeah. So let me go back to this. So talk about decentralization with the technology. So in the past, we lived and we were all taught in law school, reiterated all of this, which we're trying to move away from a little bit at least, while maintaining, of course, the core messaging. Centralized structures. How do centralized structures work? Well, you have one centralized hub that farms out the information. So let's take a taxi company. I like to use that example. How was in the old days, well, how was it possible for you to get a cab to your house and drive you through the airport? Well, you called up the operator and you asked them for a ride to the airport. Pick me up at my home, take me to the airport. The operator then called an employee of the company who owns the cabs, and the employee drives the cabs for that company, and told them what your desire was. They then, of course, drove there, picked you up, and dropped you off at the airport. So that's very centralized structure, right? Now, what has Uber done to get to a more decentralized model? Through technology. So a lot of us are thinking of Uber as the disruptor, right? Well, let me tell you, Uber is being disrupted right now itself by this new technology. Yeah? But let's go back to Uber. So what has Uber done? Uber takes technology, GPS positioning technology, to allow peer-to-peer solutions in this kind of thing. Meaning a non-employee with his or her own car is driving and is connected with the consumer through technology. It's not quite peer-to-peer at this point in the pure sense of blockchain technology. Why? Because Uber still charges 25% of this transaction that really belongs to the producer and consumer. It belongs to the two people who are providing services and using services. Yeah? That 25% does not belong to Uber from a blockchain perspective, or purist blockchain perspective. Yeah? That 25% belongs to the person driving and the passenger. On that 25%, just as one example, you can build a whole economy on that. And there are people who are doing that. So if you look at SweetBridge, supply chain with blockchain, their assumption, just one example, their assumption is that 25% of all worldwide blockchain assets, supply chain assets, are frozen because of the suboptimality of centralized technology. You can't mobilize it quick enough because our existing centralized structures have all these intermediaries with the cost structures that come with it. They believe if they use blockchain technology, and I'm not here to advertise this, but I'm telling you this as an example, they believe that they can build a whole economy on that 25% of currently frozen supply chain assets around the world. And they're putting enormous resources behind this. It's astounding. A friend of mine was just hired by them. So what's the future? It's a networked society. The idea is, to give you the Uber example, you cut out the Uber tech solution that charges 25%, and you connect the consumer and the producer, the passenger and the driver directly, without the intermediation by Uber. That's the idea. Now, are we there yet? No, we're not. There is no company out there that can compete with Lyft and Uber right now and connects these passengers directly. But there are a lot of startups that are working on this right now. A lot. You might say, how's that possible? They need to make a living. They need to charge fees for these services. They're going to try and monopolize this. Why else would they put this up? And you were absolutely right. Yeah, they will. A lot of them are doing it right now. But they're doing it with the technology. And the inevitability of the technology use is, at some point in the future, fully networked solutions that are free to society. Just to give you one example of this, there are already a lot of startups that give you free rides simply for the right to use your data, your preferences. So you get a service delivered simply by giving them your data, meaning your preferences and where you're going and what your preferences are in terms of advertising and so forth, right? They're already there. That's the future. That's coming. And there's so many startups, and this is just one example here. I have to go through this quicker to get to Craig. So blockchain financial services, done deal. It's a done deal. This is the most disrupted industry right now. I've had several meetings with, so if a bank has an innovation officer, chief innovation officer, that gets to the point where they have enough support from the most important shareholder or owner, then they can get to the point where they're saying, oh, we really have to change our business model. We are disintermediated by this technology. A lot of people are right now, especially the big ones, they have sort of ostrich syndrome about this, and they will be steamrolled. There's no way around it, ladies and gentlemen. I just can't see it otherwise. If you have innovation officers that understand what this does, and understand what the trends are, and understand what the investments are in this space, they're getting to a point where they're asking for advice to change their business model. I'm always happy to help them. Don't always have the time because Craig and I are very busy people. Okay, but so I just want to give you one more example. You all know that in the past, trade execution was T+5. Now we're at T+2 for settlement. Yeah. There is agreement. Over 90% of executives in those exchanges, NASDAQ is experimenting with. There's agreement that settlement will happen on the blockchain. It's a done deal. 2 more years, it's done. There's no question. And so there's trickle down to all the other areas. Yeah. So here are just some industries that are subject to the technology disruption. You can see financial is, of course, the biggest. Insurance is part of that. Media, title, asset title. So that's all smart contracting up there. Internet of Things, payments, government. Government. Let me just tell you this. Cambridge study, a friend of mine at Cambridge just surveyed all available central banks. And over 43% of all existing central banks right now are experimenting with Ethereum solutions. These are central banks, ladies and gentlemen. This is not some crazy startup in a garage. This is central banks that are experimenting with this. Yeah? Happy to forward the paper if you're interested. Cambridge study, Institute for Financial Services, something like this. So here, a big study, OECD and Credit Suisse. They put together adoption scenarios for global growth, value-added migration to blockchain. They have United States, sorry, it's very small, European Union, Japan, United Kingdom, Austria, and so forth. And here they listed the respective industries. So we have here retail, food and food services, financial services, real estate, administrative, public, and so forth, right? And then they estimate blockchainable portion penetration rate. So blockchainability, the word that some of us have to swallow, really hard to say, but blockchainability, meaning how blockchainable is a given industry? How much disruption happens in that industry, and how much can blockchain change the way industry is doing, industry is engaging in business practices? Just upfront, one of our co-founders here, well, sorry, it's only 2 ones of our employees is going to be very critical of what I'm going to say now, but Turing completeness. What does Turing completeness mean? I just lectured about this. Sorry for the repetition. What is Turing completeness? Any business logic can be emulated in the blockchain. The protocols are Turing complete. Now, Turing complete, the word has been abused, I know. But what I'm trying to, but why I'm using this here is the fact that Turing completeness can also be equated with near limited use cases. With near limited use cases of the technology, you can build, let's just say, a wide variety of things on this. I would actually argue you can build a whole new economy on this. Yeah? Some people argue a society. Okay, so just to bring the message on financial services home, On the high end, they're estimating, this is OECD, this is not just some crazy academic in the ivory tower, okay? This is, yeah, I would say this is a significant study. So 100% blockchainability of finance on the high end, yeah? 75% on the medium range. So I'll leave it there. So what is a smart contract? So we're talking about, just a comparison quickly, and then I want to hand over to Craig. Traditional contracts versus smart contracting based on this technology. Yeah? So we're dealing with significant timing optimization, automatic remittances, escrow is no longer necessary. So all these intermediary functions that we have, including lawyers, but I want to speak to this. I actually disagree with the slide here. Cost facilitation, virtual presence. Lawyers are not necessary for the grunt contracts, meaning the overwhelming majority of those. But, so we're talking about very simple contracting, code-based contracting. Yeah? But for the more advanced contracts that we're building right now, and again, my students have done it in class, complex smart contracts, yeah, with actual coding solutions. The need for lawyers is increasing, in my estimation, but it's the need for lawyers who understand what the technology does. If you don't understand that, you cannot add value there. You can't even advise your client about this. And if you dismiss it, I think it's a very risky strategy, extremely risky in my estimation, to simply say, well, you're here, so you're not dismissing it. Okay. So let me ask you this. Where are we right now in terms of complexity of smart contracting? From very basic digital value exchange, that's what Ms. Uko talked about when she mentioned functionality of Bitcoin, value exchange. Smart rights and obligations, basic smart contracting, landlord remotely unlocks non-paying tenants, so this is smart property. Seller lends buyer funds to buy a house. I get requests from this every couple of weeks. People now saying, please, you know, there's a lot of wealth in crypto. I want to buy real estate with just crypto. And guess what? There are a lot of people who are seeing this, that they're getting a huge premium paid in crypto. They just have to embrace that new technology and the new currency. Yeah? It's already happening across the board. Distributed autonomous business unit, distributed autonomous organization, government, autonomous society. Where are we now? What is possible with this technology today? Ms. Uko?
I want to say 3 or 4.
We're here today. Actually, this is 2 years old. Yeah, we already have DAOs, decentralized autonomous organizations. They failed miserably, but they were created and they worked for a while. Yeah, and we're optimizing this with donation DAOs. Problem is, if you're creating decentralized autonomous organizations in capitalistic perspectives or endeavors, you create huge incentives for hackers to try and prove that it doesn't work, right? And so in this case, in the traditional DAO 15, sorry, a hacker realized that the code had left out the ability to transfer funds into a subsidiary account that couldn't be controlled by anybody, and that's exactly what the hacker did. Just to whether it's white knight or not, just to prove that there was a problem, they had to fix it. Yeah, so in this case, they had to hard fork that, meaning they had to hand the money back to all investors. Yeah. But just to explain what this means, it is an entity, an institution that has no legal presence in the existing legal infrastructure. It's very hard for a lot of us to wrap our heads around. There is no registered agent. There's no registered office. There's not even a registration. There's not a registration state for the entity. It's all code cyberspace. All the legal relationships are coded completely. The government has no role in this, zero. So the relationships are coded. The existence of the entity and the allocation of profits is all coded. There is not one single involvement of the existing legal infrastructure in any jurisdiction. As a matter of fact, there is no jurisdiction. There is no in personam jurisdiction. There was nobody to be hauled into court about this. The existing legal infrastructure had zero relevance, zero. Yeah. Okay. So let me move into this. Craig, do you want to do this, or should I get started? Okay.
Yeah.
So this is based on the article Craig and I wrote in the ABA Business Lawyer last year. So just to bring home this idea that there is an incompatibility. So when Craig and I wrote this, and I'll walk you through this in a sec, just to give you this story up front, the ABA said to us, well, we want to publish this, but we don't quite believe that there's nothing else in the existing legal infrastructure that cannot cope with this. You have to show us the search results in the federal databases. So LexisNexis, FastCase, all that. So that's what I did in this case. So I knew there was nothing, but I did the search. So what did I do? All federal, all state, 4 keywords: Ethereum, smart contracting, Bitcoin, and I forget the last one. There was another one. Anyways, so guess how many cases total as of 8 months ago that even have a mentioning of those words? 7. 7. In dicta, in footnotes, nothing on point. 0. Let me explain this and put this a little bit into context. How many millions and millions of smart contracts are executed every day? Millions. How much fraud is in this market? Quite a bit. Hard to quantify. How many of the existing ICOs, average funds raised 9.5 million in last year? Average. What startup can use 9.5 million at the beginning? Very few. Yeah. On average, $9.5 million raised in an ICO, initial coin offering. Yeah. A lot of them no longer have a product. This money is just, they made a promise with a white paper that says, we have this great idea, invest in us, we're going to build this product, your coin is going to be worth more, invest in us. Yeah. Over 60%, 65%, some percent is even higher of those products are not being built right now. Yet, nobody sues in court. How is that? How is it possible that these people are willingly giving away millions and the money is gone? Nobody sues. But our conclusion was, well, there's something wrong with the existing legal system. Otherwise, people have huge incentive to use it, right? So what might this be? Let me walk you through it. So knowledge of the counterparty. Well, in the internet, so I'm comparing internet transactions. So the last new technology with the new technology here. Yeah. So same thing, different parameters, of course, and different outcomes in this case. So knowledge of the counterparty. So in an internet transaction, all the technology does is it facilitates commerce and accelerates it. Yeah. You know your counterparty. You know who you're dealing with. And you know what, at the very minimum, by way of the IP address. Any judge can exercise in personam jurisdiction over the counterparties and haul them into court. Yeah? Centralized databases, we know how to get after these people. The existing legal infrastructure works. There's no problem. Same with payment details. I can trace credit card details, no problem. Yeah? We have whole security experts that do exactly that. There's a whole industry around this, tracing, validating, security, and so forth. Yeah, traditional legal infrastructure applies. Now we had to tweak it a little bit. There's some new cases, but it's basically the same thing we did before, just with more tech involvement. Yeah, and we have traditional legal remedies that we could apply out of precedent. Yeah? The way our legal infrastructure evolved. Now let me translate this into crypto. So virtual private networks and cryptography make parties anonymous. Some people take issue with this. Let me tell you, if you want to be anonymous in Zcash and you do not want to be found, Monero and Zcash, 2 platforms that please feel free to look up, they facilitate absolute anonymity. There is not even a question about this. If you want to be anonymous in the transaction, you can. These platforms allow that. Others, very hard in my estimation to get around in terms of finding the counterparty, but there may be some ways. Yeah, if Monero and Zcash absolute virtual guarantees that it's anonymous. So think about what that means for the judge. But before that, so cryptocurrencies, payment details are known. If you use that in anonymous transactions, there is no traceability. There simply isn't. So if a judge were to wish to exercise in personam jurisdiction over parties that are otherwise anonymous, can the judge do that? Technically, in personam jurisdiction exists. We all agree on this. Practically, impossible. Impossible. And I stand by that. I get attacked for it. It is impossible. Monero and Zcash is the end. That's the end. That's it. It's impossible. So practically, it's impossible for the judge to exercise in personam jurisdiction. So think about that as the millions, and this is exponential trends in smart contracting. Please, I could show you the data. I don't have the slide, but please believe me. Exponential trends in smart contracting. And the values increase exponentially with it. Judges cannot exercise in personam jurisdiction practically. Technically, it exists. Practically, it's impossible to enforce. Impossible. That means the existing legal infrastructure is irrelevant if parties so choose. So I want to transition quick. So what we say is, if that's true, we have to find an intra-blockchain solution to fix it, because the existing system doesn't work in it. Now, there's some colleagues of mine, Angela Welch, Carla Reyes, various folks are saying, well, yeah, okay, well, we'll code in the existing hybrids, meaning we're providing coded parameters for the existing law that we impute into smart contracts to give the constituents / the counterparties some rights. Okay, you can do that. There's no problem with it. That's an interim step, intermediated step, if you want, yeah, to the pure solutions. But ultimately, if parties don't want it, there's nothing you can do about it. It is anonymous. There's nothing you can do about it. And with that, the current courts are out. These people can create their own culture, society, economy, if they so choose. And they so choose. It's very clear. So, to me, if we want to give, if we believe in the future of this, what we need to give counterparties in crypto is a legal solution for things that go wrong within the technology that they believe in, because they don't believe in the existing solutions for all the inefficiencies and other problems that we have, right? So how is that possible? How can you create a distributed jurisdiction? So I want to hand over now to Craig, and I'm so sorry I took 15 minutes of your time.
No.
Go ahead.
Okay.
Sorry, Craig.
No.
Oh, here.
Okay, so I don't know about any of these slides. I actually want to sort of change, based on the tenor and atmosphere, I think, of maybe more antagonistic attitude than I'm used to.
We're lawyers here.
Yeah, sure, absolutely. You're gonna have conflict, right? I think I'd like to break it down a little bit smaller. Thank you very much for inviting me to speak on applications and ramifications in law and business when I have absolutely no expertise whatsoever in either of these areas. I won't be talking about in personam jurisdiction or any other jargon that you're all used to and understand. So I'd like to actually do what mathematicians do and break it down a lot smaller and simpler, and so that everybody understands things a little more basically. And that way you can argue even better against me. So what is a smart contract? And what's the value of the blockchain? So the blockchain gives you the opportunity to find consensus without having a centralized authority. It's decentralized. It runs by consensus by a distributed group of nodes or computers or users who all find consensus and agreement on what is the truth of where the Bitcoins are and who owns them at any given time by consensus, not by authority dictating, I'm saying that this Bitcoin was owned by this person. There's no centralized place you can look for that. It's only by consensus by everybody involved. In some sense, they vote with their power, with their actions. Okay, and so that decentralized power of Bitcoin is what gives its utility value. So we say that this tulips, right, is the idea. It has plenty of utility value. Number one, when it doesn't have this centralized authority, it makes it more secure. So the Fed is not going to decide to change the exchange rates on Bitcoin. It's stuck. Everybody knows what the protocol is going to be in 100 years from now. It is predictable in that sense. Okay. And it's also decentralized, so it's a lot more efficient. You don't have to pay pieces to make sure that the authority is running properly. And so it's completely secure and decentralized, and so it's more efficient. Now, with the next piece is then how do you, so that allows you to move fungible currencies around, that store of value, certainly and securely, is with Bitcoin. But then smart contracting is the platform that started it all is Ethereum, okay, instead of Bitcoin. And they allowed you to make transfers of more complicated logic than just here's some token digital money and it goes from this account to this account. Instead, here's a complicated program that everybody is going to find consensus on. And this program will run in what's called a virtual network here, a virtual machine, so that everybody can run the program and everybody can guarantee that the program runs correctly. So the smart contract is a computer program. And so it has this rigorous mathematical logic that the smart contract runs against. And so this sort of contract doesn't require any sort of human regulation, human execution. It is completely done electronically, completely done with mathematical logic that everybody can agree on that that's the way it works. Again, decentralized, so that there's no centralized platform that guarantees the program will run properly. You don't need the Amazon headquarters to make sure the databases are working. It's just shared amongst at least 5,000 different computers that are all collaborating, but usually about 50,000 and sometimes 1 million different computers is the idea of this. And so these 5,000 different computers are all sharing in the workload. And so there's no centralized risk of being attacked, either hacking them or by that they can influence the contract, so that everybody can have predictability about these contracts. And the good news is that it allows security and certainty of execution and self-execution, self-regulation. So that's what smart contracting is, and that's what's the big threat to the legal profession, right? Is we have these very efficient solutions for automating most of your job, right? Is what the engineers want to do.
For the basic smart contracts. Yeah.
Precisely. The basic naive idea about smart contracts is that they want to get rid of the middlemen. They want to get rid of the lawyers, the managers, all the other pieces. An engineer, if you speak with them and ask them about their business, within the first hour, every single engineer I've ever spoken with has mentioned, if we could just get rid of the people, everything will run better. And it's the same idea. We want to get rid of the lawyers. We want to get rid of the managers, get rid of the middlemen. They don't, that is a naive point of view. Everyone in the room knows that. Everybody knows that you actually get the big bucks because you add value. You create security and certainty for business in these contracts. And it's a 10,000-year-old effort in order to figure out all the different ways somebody can game the system, and we will make sure that business moves ahead properly. So these naive smart contracts just won't work. Their incentives are built wrong. Their incentives are built in the worst way you could possibly do business. If you have a computerized version, a smart contract with no mediary, no authority who can regulate it and look back and say, there's a dispute here and we're going to resolve it in the case of the person. There's no way to do a spirit of the law sort of business. That's a bad incentive. It's all entirely code is law. It's all logic completely. Imagine your worst possible fantasy about a judge and how strict she is. Well, code is law is 1,000,000 times more strict. It is absolutely the letter of the law, and there's no fighting with it. There's no anything else. And so there's no way to get resolution to any sort of problem in case that happens. So there's your motives then in business have nothing to do with spirit of law, nothing to do with I want to try to help the other person. You want to just get as much as you can out of that smart contract. So the motives in any sort of smart contract, the naive smart contracts, are entirely a zero-sum game. And that doesn't work in business. In business, you want everybody to acting well to actually create a positive sum game, actually create some value. You'd like to maybe create some reputation so that there will be a future in your contracts. And in smart contracts, naive ones, there is no possibility for that. You are just going to try to get as much as you can, and so business will break down under these naive smart contracts. So that's the good news about these smart contracts, is they won't work. But it's coming. There's going to be more complicated, more sophisticated smart contracts that actually build in sort of a reputational element that will create a smart contract that does have the right incentives for business to do things right, that builds in remedies, that builds in some sort of way that we can have dispute resolution in these smart contracts, and not just have the computer says it functioned this way and now boom, that's it. It's the end of the transaction. So that's sort of me trying to argue about the room. I don't know if there's any, we have 5 minutes left, so.
Yeah, we
Should
may
I
be
get
best
into-
off if you just ask questions.
Please.
How can you, as a matter of logic, how can you a priori guarantee that it can't be hacked?
Oh, well, so a priori, if we're gonna talk about it it's basically there is no such thing as hacking here. Whatever happens in a distributed system is what happens. So there's no such thing as hacking.
Somebody got into it and altered the record.
That's exactly what Bitcoin has solved, is that an individual person, in order to break the consensus, has to over-compute the entire network. So in order to do that, you can't hack it. You can hack any system at all. But it's very clear how to hack Bitcoin. And that is, if you have half of the computers of the entire network, then you could outcompute all of them. So right now there's millions of computers running full time to guarantee that Bitcoin is secure. And the way that you could hack it is if you had 500,001 computers. So you were faster than half of the, well, you'd have to have 1 million computers. You have to outcompete the entire network. And that's how you could change the value of something. But aside from that, you can't make a block. You can't change anything. Anybody can change anything if they prove that they're the right person to change it, that everybody can check. It's all transparent. And so the way that, I haven't gotten into the complicated way that blocks are made each step with hash function, but it's called proof of work. And so the whole network is spending ridiculous energy. As of last year, it was 3.8 terabytes. It was more than all of Denmark, more than all of Minnesota. All the energy we spend in cars and factories and every other piece of electricity and energy in Minnesota is going towards Bitcoin network as of last year. And it's growing exponentially. So to keep the Bitcoin,
Paying for all that.
it just is what the value that everybody feels like it's worth. So for the energy, it's the people, the miners, who are making the blocks. They get rewarded with new Bitcoins that are minted each time, and they get rewarded for maybe in the future some tiny transactional fees.
Right, I meant
For each
who's paying for
transaction.
the electricity.
The miner, the person who has who is paying for the electricity. I'm sorry, I haven't been repeating the answers of the questions. The people who are paying for the electricity are the miners, the people with the computers. They're in the distributed system. Each computer is just running in order to hope to win the lottery ticket that they'll win the next block, and they will be able to win the next Bitcoin that is minted.
It's making free money by letting energy run and try to outcompete other systems.
Yeah, I would just run this computer, have it running the system that that tries to solve the encryption algorithm that encrypts the blocks. And if I was selected and I win the encryption technique, then I win a couple of Bitcoins and I win $20,000.
It's the fastest computer, the fastest miner gets the reward. So there's a group of people out there that are
Yep.
trying to verify encryption in the system for cryptocurrency, the fastest one gets the reward.
Fastest and luckiest.
Luckiest, yeah. There's a,
That's enough.
it's not just speed. Okay.
Yes, so just was wondering, given the current situation, right? We have patents that govern the intellectual property behind the blockchain, right? For now, anyways. And
No, it's
No.
pretty open source.
well, yes, but no, right? We've got, so blockchain patents, the number of blockchain patents have also increased, the patents have increased exponentially, right? With, you know, an exponential increase.
You know who filed those, right?
Well, yes, so that goes to heart of my question. The majority of those are by Chinese firms, by China as a whole. And I mean, I think they're far and away, I think they have twice as much as the next leading country, which I think is the US, maybe more than twice as much, I don't remember. But anyways, the point is that, I mean, as the patent landscape is getting more and more crowded with these blockchain patents, I mean, they're going to start to assert these patents. I mean, that would be the reason why I think they have them. So in light of that, how do you think, both of you or anyone here who might have knowledge about this, how do you think that would affect adoption rates? And I mean, this is still very early stage, right? It's very clunky in a lot of these applications. So there need to be iterative-based solutions perfecting of these applications as time goes on. So I mean, in light of how the IP space is getting more and more crowded, how do you think that's going to affect the rate at which this really can be practically applied over time?
Okay, so first of all, I think there's a real question mark as to how meaningful those patents are. Secondly, I mean, in this space, if you want to.
Yeah, I can't imagine.
Well, we
You
don't
act-
know, but I mean, I have looked at some of these patents, and I mean, some of these things are behemoths, quite frankly. I mean, hundreds of pages, you know, 100 plus claims. I mean, you know, so that would kind of indicate, well, maybe they're narrow. I mean, I don't know, but
The space is
it-
so
it's-
open source.
it's-
Just to
it's
answer
getting
your
more
question a
crowded.
little bit,
I mean,
the space is so committed to the idea of open source technology that they wouldn't respect a patent if they did have one, and it would be hard to actually execute a claim against somebody for these
well,
intellectual
what do you mean
properties.
by they? I mean, if they go to court and they can prove that the elements of the patent have been infringed, then, you know, there's going to be a court, which is currently the law of the land, that's going to go and, you know, basically make them pay damages or, you know, enjoin whoever is infringing these patents from, you know, doing this activity. So it's I guess what I'm saying is directionally it's going to
And who would stop Bitcoin? Who would stop Bitcoin from using the new development of the new protocol that Bitcoin uses, which is infringing on your patent? Because Bitcoin is completely
well, I guess
decentralized.
I'm more talking about like as applied to startups, as applied to these, right?
They would-
These companies
could
that
be
are
in
trying to,
trouble.
you know, really get it more into the mainstream.
Okay, this is, we can talk about this at length, but just to give the audience a bit of a perspective on this debate, there are centralized businesses, existing businesses that have started to use the technology, and they come to the space with a very centralized perspective, which means I want a patent, I want this for myself. Most of these businesses are filing these patents out of defensive moves against disruption by the technology. So they file the patent after they have gone into the space a little bit without fully understanding the implications of it, and file a patent based on something that they think they can occupy for their own business structure going forward. It's completely separate from the open source community that started this whole technology. Yeah. So what you're describing are centralized perspectives on the technology that are directly in conflict with the underlying philosophy of the movement. You could do it. In my estimation, it will be meaningless down the line. Completely meaningless, if not completely unenforceable.
Would a transaction that uses cryptocurrency be subject to taxation by any government?
Well, yeah, you should self-disclose any transaction you make. And so that's what most people, I've never spoken to a single person who wants to dodge taxes, who has Bitcoin or Ethereum, Ether, or any other thing. So you'd have to self-disclose. But the fact is, it would be very difficult to enforce if you were on Monero and you're hiding these things. It's really difficult for the government to come in and step in and say, well, they can do that for any other business, but for a decentralized system, they can't stop the system from running. They can't come in and say, you were behaving poorly, and we're going to shut you down. They can't shut down Bitcoin. If they shut down Bitcoin in all of America, no miner is allowed to access the internet, and we somehow became that draconian and stopped every person from accessing Bitcoin or using their computers to make Bitcoin, it wouldn't stop Bitcoin for a second because it would still exist in every other country. And if we stopped it in every major country, it would still exist in Togo. It would keep going.
And because of that, a lot of offshore jurisdictions are now realizing that they have to start using the technology to tax, meaning they're using the technology itself to charge taxes on people, not just on the people purchasing this cryptocurrency, but they're using the technology itself as a government to charge taxes. That's the way forward, to maintain relevance for government. Because why would government otherwise get behind it? The very existence of the technology calls the existence of government into question. The only way that they can get behind it and maintain their own existence is if they use the technology itself to maintain its own existence by way of taxing. Yeah, that's the way forward. And the smart ones, so Cayman Islands, there are a bunch of offshore jurisdictions, they're pushing really hard in that direction because they understand. Doesn't mean they get it in time, but they understand.
Is anyone offering blockchain-based social media platforms so that people can communicate in anonymity without being oppressed by ideological authorities?
Yep, it's pretty successful. It's a platform called Steemit. And so Steemit's decentralized. It's run by the developers of EOS is a $1 billion cap right now. Is that about correct?
It was before EOS.
Oh yeah,
Then
so
Larry
exactly.
created before.
And so
But it's the
Steemit
same protocol. Yeah.
has the same protocol, and it's decentralized. And so it's like Facebook that doesn't have Zuckerberg. It's Facebook with no centralized structure, and the users choose what happens with their information. So they can choose to leave it out there, and they can choose to see advertisements, and so that they can make money of it. They can choose to keep all your information private and keep it amongst only your friends, and no one can look at it. And the protocols are clear. That's one of the big values is the openness of the information, is that anybody can look and audit how the thing runs, so that you know that nobody's stealing information that you don't want. And so it's a big plus. Whether or not it succeeds or not, I don't know. But the users actually can, when they create content and they put it on the Steemit platform, there's a thing called Steem, which is a little crypto token, a little currency token, that if people upvote you with their tokens, then you gain more money. So you get paid for adding content to that platform. And
1.2 million transactions a day. It's one of the most successful ones out there.
But without having a centralized source, it means the efficiency, all the value that you add is coming back to you. It's not being taken away by the centralized authority there.
But you want to critique DPoS a little bit, at least.
Yeah, no, I don't think it's going to work. But
they have a consensus algorithm that's not very secure. It just allows this to happen right now. It's not a pure
they haven't
blockchain.
Yeah, they don't like proof of work. The problem with Bitcoin of wasting 5 terabytes, I don't know what it is right now, meaning twice of Minnesota right now, I'm guessing, based on trends. They don't want to use that. That's a horrible thing that Bitcoin is doing, is wasting so much energy. In my hometown, my mayor I grew up with is brokering a deal to get a $25 million investment in because they're using all the extra energy that's allowed and bring in these Bitcoin mining operations, all these just computers, and just use up all the energy all the time to make Bitcoins. And for the environment, for just energy efficiency, period, this is a really horrifying thing to me, that it's just growing exponentially all the time, just to make sure that Bitcoin works. And if you don't believe in Bitcoin, it's all the worse, right? It's just tulips.
So there are new ways to create consensus algorithms that are more efficient, much more efficient. That's the third generation. Right. And that's what Craig and I are working on.
So sorry, that's proof of stake instead of proof of work. You don't have to use the computers to constantly use energy as fast as you possibly can, as much as you can, in order to guarantee consensus. There's other ways of doing it called proof of stake, where the protocol is more clear and way more energy efficient. It would take 5,000 computers doing one calculation every 10 minutes instead of millions of computers doing billions of calculations every second. So that's the future of this.
The future is bright for all of us.
Maybe.
Thank you very much.
Thank you.